Our new Constitution is now established, and has an appearance that promises permanency. But in this world, nothing can be said to be certain, except death and taxes. Nobody ever likes taxes. They persist, however, because they are seen as a necessary evil, something we must all pay into for the good of society as a whole. And while there are many different arguments as to different methods of taxation, different opinions on who should be taxed, and how much everyone should be taxed for various facets of government spending, I'm going to try and skirt around all of that so the comments section doesn't turn into a war zone. Instead, we are going to focus on the history of ancient taxes. Where did taxes come from? Why were they first implemented? And how the collection system has changed throughout the roughly 5,000 years since we started recording their existence. Something that's important to note is that many of the taxes will involve agrarian societies who pay via crop share with the government. So grab your calculators as we learn something new. Around 3000 BC, in the first dynasty of the Old Kingdom of ancient Egypt, the earliest forms of taxation were being recorded. There were two different forms of taxes that were paid to the state: the tithe and the corvée. The tithe was an amount paid to the government, and the pharaoh himself would tour the kingdom twice a year to collect the tithes. This was also described in the Bible when it states in Genesis chapter 47, verse 24, "When the crop comes in, give a fifth of it to the pharaoh. The other 4/5 you may keep as seed for your fields, and as food for yourselves, and your households, and your children." So taxes weren't exactly paid with money all the time. This is more apparent when you look at the poorer population of ancient Egypt. They would have to pay the other form of taxes, the corvée. This was extremely common for the Egyptians to have to pay when they couldn't afford to give enough to the pharaoh. Instead, they would be enlisted to pay the corvée, giving their labor to the government instead. This labor was extremely valuable to the government and provided them with a free source of workers for their many projects. And when you are spending so much time out of your year working for the government as a form of taxes, you have less time to work for yourself to pay for the next round of taxes, thus forcing you to work for the government once again. It's a vicious cycle that left many people essentially enslaved to the pharaoh for their whole lives before passing the torch to their children. Ancient governments didn't always just take what they needed, though. In the Hittite Empire, established around 1750 BC, many of the grains collected as taxes from the surrounding lands were displayed prominently in the capital as a show of the king's wealth. The Persian Empire saw a more regulated and sustainable tax system introduced by Darius the Great around 500 BC. This system was tailored to each satrapy, a smaller territory within the Persian Empire that was ruled by a satrap, a sort of governor. Each of the 20 or 30 satrapies in the empire was assessed according to its estimated or predicted productivity. The satrap collected the amount the emperor said was due and would send it to the king's treasury. The collected items could include anything from silver currency, crops to supply the army, and gold that had been mined from the provinces. The point is, the territories were assessed to find what they commonly produced and what they could specialize in. Then, they would have their taxes reflect their specialization. If your territory was rich in gold and had many mines, then your taxes would be paid in gold. If you were in an agricultural community, you would pay a share of your crops, etc. For the most part, they weren't converting to a common currency to be paid in a specific denomination to the government. In ancient Greece, taxes were based on the concept of liturgia, or public service. The liturgical system dated back to the earliest days of the Athenian democracy and meant that the wealthiest in the community were responsible for providing some of the public expenses. Take the cost of religious festivals, banquets, sacrifices, and gymnasiums, for example. There was also a separate division of the military liturgies to finance the military in the event of a war in Athens. They rationalized the system by saying that the rich should assume the expenses of the city since they had an unequal share of the wealth in the area. They didn't enforce any of the taxing by law, but it was seen as prestigious and honorable to be able to shell out your wealth for the sake of the community. Many of the wealthy citizens often gave much more than was needed to gain more recognition, garnering the status of heroes in the community and held in a similar light to the war heroes of the time. The Panathenaic Games were sponsored by liturgists and donated for the enjoyment of the entire city. Many of the monuments and buildings dedicated to the gods were also donated. If a liturgist failed to participate in their civic duty to donate wealth, they risked being branded a disgrace to the community. Although, there was a way around this. They could file a legal action against a rival citizen who they claimed was wealthier and thus was more capable of bearing the financial burden. The defendant then had 3 options. He could accept the responsibility, give the spare assets to offset the cost of the bill, or submit to a trial where a jury would decide which of the 2 men were wealthier. Not an easy thing to do, with fewer methods of accounting for assets and assigning value to items like we have today. This method began to disappear in the 4th century BC. Instead, they had a tax on the wealth of the richest, which was only levied when they needed it, usually during war. They also began using forms of indirect taxes, like taxing slaves, herds, flocks, wine, hay, etc., taking a percentage for the government. The early days of the Roman Republic saw taxes consisting mostly of modest assessments on owned wealth and property. Normally, the tax rate would be around 1%, but in times of war could climb as high as 3%. These were levied against those with land, homes, slaves, animals, personal items, and monetary wealth. Taxes were collected from individuals, and they did allow partial payment refunds if a person claimed that they had an excess amount of taxes collected because their census data tended to be somewhat inaccurate. By 167 BC, the Republic was much richer as it had had a series of successful conquests. Gains such as silver and gold mines created an excellent source of revenue for the government. At this time, Rome no longer needed to levy a tax against its citizens, and only looked to the provinces they had conquered for collections. As they expanded, census data collection and management became more difficult. To ease the strain on local governments, taxes became assessed on the community rather than on the individuals. The tax assessments fell under the jurisdiction of the provincial governors and various local magistrates, using rules similar to the old system. Tax collectors were used to collect these taxes from those in the provinces. Rome would put the collection of taxes up for auction every few years. The publicani would bid for the right to collect in particular regions, and pay the state in advance of the collection. These payments were essentially loans to the state, and Rome was required to pay back the interest to the publicani. So the tax collectors paid for the right to collect the taxes, and then the government would allow them to keep a larger amount than they initially paid in order to make the collection profitable for them. The publicani were also responsible for converting the items, property and goods they took as taxes to coins for the treasury. So at the end of the collection, the tax collectors were able to keep anything in excess of what they bid, plus interest due from the treasury, with the risk being that they might not collect as much as they originally bid. Tax farming, as it was called, proved to be an incredibly profitable enterprise and served to increase the treasury and the wealth of the publicani. However, the process was, of course, ripe for corruption and scheming. For example, with the profits collected, tax farmers would collude with local magistrates or farmers to buy large quantities of grain at low rates and hold them in reserve until times of shortage. These publicani also frequently served as moneylenders or bankers of the ancient world, and would lend cash to hard-pressed provincials at an interest rate of 4% per month or more, extremely high for the time. Then, in the late 1st century BC, after considerably more Roman expansion, Augustus essentially put an end to the tax farming cooperation. By this point, there were constant complaints from provincials for excessive assessments and large unpayable debts ushered in unnecessarily. The publicani would continue to exist as moneylenders and businessmen, but their access to easy wealth through taxes was gone. Tax farming was replaced by direct taxation, with each province required to pay a wealth tax of about 1%, and a flat poll tax on each adult. They also changed the census system in order to more accurately gauge the number of taxable people in their income and wealth status. This saw a taxable yield that greatly varied based on economic conditions, but in theory was less open to corruption. They made sure that the flat tax allowed people to know exactly what they needed to pay, and they allowed excess income to remain within the communities. The system allowed for significant economic growth and expansion, but as time passed, future emperors were challenged with meeting the quickly rising cost of administration and financing the military, both for national defense and to maintain the loyalty of soldiers in case they were needed for a future conflict. In the late 3rd century AD, during the reign of Diocletian, there was a drastic change in the system. He reinstated land tax, levied special tolls on money traders and companies to help increase the tax collection. This should have eased the burden on individual taxpayers, but it didn't work that way in practice. As an example, additional taxes were levied on landowners after the land tax had been paid, because this was now a separate tax instead of taking into account the tax that had already been collected. The burden of paying the expected amounts was shifted from communities and individuals within them to local senatorial classes. The senators were often then subject to complete ruin in the case of economic shortfall in their particular region. This problem was compounded after making the senatorial class hereditary. In doing so, all debts and economic ramifications were passed from one senatorial generation to the next, ruining entire families and never allowing for a recovery that could benefit the entire community. Economic struggles that plagued the late imperial system, coupled with the tax laws, played a part in the demise of the Roman Empire. Taxes suck. You hate to see the money go, whether it's taken out of your paycheck, or added to your grocery bill, or paid directly to the government. But sometimes it's nice to look back through history and see the impact that tax funding has gone to. Whether it's pyramids, ancient sculptures, or some of the most famous ancient militaries in history, there are a lot of public services and good things that likely would not have happened without the use of taxes. So while taxes suck and will likely continue to suck, I think it could be wise to reflect on history to see how things were done differently, because we stand on the shoulders of giants that came before us. So we can view what has been tried, what worked, and what failed, and adapt our current system accordingly. Not every tax system from the past worked well, but new methods were explored. Things were tried in order to find a better system. I don't believe that the tax systems of the world have reached their final form. So if you don't like how things are now, they can change, for better or for worse. Let's work together to make sure it's for the better. Thank you for watching Learn Something New. If you found this episode interesting, please like and subscribe for more content. And comment below if you want me to do another episode on tax systems, but this time from the Middle Ages.